Hello and welcome to my channel. So I thought I would do a quick take of the recent Bank of Queensland acquisition of ME Bank. So this merger recently happened, and I thought I would do a quick take regarding the investment implication of this new merged entity. The shareholders of ME Bank have unanimously agreed that this merger should happen. ANZ Bank was also interested in acquiring ME Bank, but it finally didn't go through to them. Bank of Queensland won the final bid. So, what's the nature of this merger? The nature is such that the brand of both banks will still be retained. So, BOQ will retain its brand and its Queensland focus. ME Bank, on the other hand, would also retain its brand. Its brand. So, in terms of when the acquisition will be finalized. It's expected that it will be finalized later in August. And Bank of Queensland has also recently completed an institutional raise to fund this merger. The institutional raise was successful, and there would also be offerings of some of the discounted shares to the existing shareholders. Institutional raise was conducted at a share price of $7.35, which is a discount to the existing price of just $8 before the trading of Bank of Queensland was altered on the Australian Stock Exchange. So in terms of the size of the newly merged entity, so they would have a total asset of $88 billion. The total number of customers would go up to about 1.35 million. So ME Bank has an existing customer base of 450,000, and Bank of Queensland had an existing base of 900,000. So when you put that together, it's about 1.35 million customers. So in terms of the total savings that's been going to be managed by the two entities, that would be just about $56 billion in total. So that is a fairly big size. But when you compare that to the existing Big Four, does that give us a Big Five? I'll talk about that later in this presentation. So in terms of the strategic implication of the merger, which is the next thing I'll cover, the merger would is very strategically important in the sense that first and foremost it will expand the geographical coverage or footprint of both banks. So Bank of Queensland used to be really they used to have their larger footprint in Queensland, although they have a small presence in other places, including even in Western Australia. But this will really expand their merger into Victoria, and this is because ME Bank has they're Victoria centric. Their business was focused on Victoria. So in terms of geographical coverage, this is very strategic. The second thing is they would be able to focus more on what they were already doing, which has been focusing a product that was simple and customer centric. The two banks sort of have they have a synergy in this regards, and this will continue to make them grow in that aspect. The third aspect is the digital offering. I for one have always thought that Bank of Queensland needed to improve on their digital offering. My partner uses the banks with them, and I thought the e-banking services was not up to scratch compared to what Commonwealth Bank offers, because I use Commonwealth Bank. So they also highlighted that this merger would help them, improve their mobile banking offering. So they will go more into cloud banking and digital banking. So we would expect to see probably more development in this regards. It appears that ME Bank is much more forward looking in terms of digital banking, and they can actually use some of the assets to come up with a much more synergistic and stronger product. In terms of whether we now have a Big Five bank or a Big 4+2, I think it's more of a Big 4+2, because when you really compare the total asset of the new merged entity with any of the Big Four bank, you see that it's really quite small and negligible. In terms of asset, NAB bank, for example, has an asset of over $800 billion. Commonwealth Bank, which is the biggest, has an asset. They have an asset of over $1 trillion. So no, we don't have a big five. I mean, we don't have a fifth big bank. As some media entities have appeared to sort of be portraying this. Although this could be, a little bit more of a competition for the big four bank, but at the end of the day, in terms of size, they're nowhere compared to the existing big four banks. So the product offering and the geographical footprint might become just a little bit of a competition, and they might actually join, the likes of Macquarie Bank and Adelaide Bank as, being the so-called plus two or plus three, whatever the case may be here. So in terms of the implication for the Bank of Queensland share, in general, the Bank of Queensland has just been really a dividend kind of investment, but unfortunately, their dividend payout has been really falling over the last 3 years or so. So the frequency of the payment has reduced, and what they paid out, the size of the payout has actually also reduced. In terms of the profit, you can also see that their profit has taken a hit. It's probably linked to the events of last year, COVID-19, and still continuing to this year. The revenue still has a long way to go in terms of recovery. It's almost been reduced by about half, and that has a direct implication on the dividend that is being paid out. So this is more of a stable investment, when you compare to what I cover on this channel, which is more of high growth shares. So in terms of that, I think if you're investing in Bank of Queensland, you're probably doing it for dividend sake, because you don't really expect the share price to grow to increase significantly like you would expect in other non-dividend stocks like the high growth stocks. So and I'll cover these two aspects. So what should you expect? Does the merger make this a more attractive investment? In terms of investment instrument, in terms of dividend. Well, this could be the case. We will still have to keep a close eyes to be on this, to be able to be sure that the merger would make significant turnaround for their revenue, because if the revenue does not improve, they're not likely to pay more dividend. So, but the two banks combined, the revenue, it appears that ME Bank was doing well on their own initially, so this might rub off on Bank of Queensland as well. They might become stronger and perform a lot better with a better revenue, and the dividend might actually increase. But this is a long term outlook. This is not a short term thing. So in terms of short term, would I be investing in this just because I expect the merger would turn out to increase their share price? No, I don't think so. In the short term, I think there will be fluctuations in terms of what the share price looks like. There will be some form of dilution, which might actually bring the share price down. Also, on a long-term basis, it is possible that the share price will go back to the highs of $14. It's currently trading at about $8 now, but in the past they've actually had a peak of around $14. So we might see that that kind of approach to that same high price if this company, but this is all speculation. It's very hard to predict some of these things, especially after a merger. There's gonna be some level of volatility, so it's something to keep an eye on. But in terms of my take, I wouldn't be investing in Bank of Queensland just because I expect their price to go up, or I expect the share price I expect to get some returns from a higher share price. That would not be the case. There is a stronger proposition here to probably invest for the sake of dividend stability. So it's likely that the dividend would become more stable. So that is just my argument. Again, this is my take, and my analysis is just for educational purposes. It's not an investment advice, so you have to do your own analysis and research to be able to decide if this is the right decision for you. Thanks once again for listening.